Hello again, and welcome to Retirement Coffee Talk with Sharice Rivers at Zinnia Wealth. You can find us, of course, online, zinniawealth.com, and we'll talk more about that and why we are here. We are here really to talk about you and your retirement, and the way that we're going to start today is this. The people over at CBS are doing kind of an interesting thing. They're following some couples that are preparing to retire, and every now and then they check in with them. And in April, when the market went down like 20% and then went back up again, and it's been all over the place, they said, well, this is probably a good time to check in, see how people are feeling. So this couple is in Boston, Alicia and Chu Gomez, and this is kind of interesting. This is Alicia talking about how she feels about the market.
I feel like I'm on a roller coaster. You just hope that if we're going to be on the downturn now, will we be on the upturn when we decide to retire?
All right, I got a bunch of questions about this. Okay, so they're 57 and 59 years old, and she says, I don't know if I want to be on this roller coaster. Do they have to be on the roller coaster, Sharice?
No, definitely not. It really depends on when they're going to retire. I mean, if they're going to retire at between 62 and 65, they certainly can get off the roller coaster ride and invest in alternatives that are safe. Maybe make a little bit less interest, right? I mean, anything that's safe, you take away interest. But a lot of people, Randy, when they're getting close to retirement, they're just over the roller coaster ride. I mean, we're barely back to even to where we were last time it went down. So people get very frustrated and aggravated with the downs because they don't understand, okay, it takes longer to go back up and then it goes back down again. I mean, it's been a roller coaster ride a little bit, right? And, we seek risk management. That's the key here, especially for people like that are like, really it's talking them off the ledge saying, hey, listen, it's okay to have some money in the stock market and it's going to go up and go down, but we always know it goes up, right? When you get the hardy staples of our world types of funds or stocks, et cetera. I said, but we can pull, 60 or 50% to the side and put those in 4 or 5 different baskets that are either safer or no losses whatsoever and strategize that way. Because most people in retirement will survive off the safe strategy, still potentially have that legacy at the end of the day, and then still have a good spending plan and be able to go on those trips that they want. But everyone, unfortunately, Randy, feels like we got to have double-digit returns. We've done this our entire lives. Now we're getting ready to retire. My family, they stay invested in market. They have this, they have that. We got to stay invested. And you really don't. Don't get me wrong. I love money in the stock market. I love stocks. I love dividend funds. I love it all. But you do not have to survive retirement with money in the stock market. Even though I will advise maybe a little bit, you do not have to. Because when we do our income plans and we roll out, hey, this is your income and here's the minimum rate of return, people are running out of money, right? Unless you're just going to overspend past our plan, of course.
Well, it's pretty common for people in their category, 57, 58, 59 years old, to look at your retirement account and go, gee, I wish that number could be bigger. So let's kind of push all in and see if we can really make a run right before we retire. And that's kind of what she said at the end. I just hope it's going to be up when we retire.
Yeah.
Well,
hope is not a strategy.
Yeah, you can't control that one, can you? Imagine you retired in 2007 and then 2008 happened and down she goes right when you retire. That's not where you want to be, is it?
No. Hope is not a plan, obviously. A lot of people do retirement that way. What ends up happening is that people don't retire right when they think they're going to retire because the hope doesn't always work, right? Let's say you have a $900,000 401k right now and you're thinking, okay, I don't want to retire until it gets to $1 million. And I hope in the next 3 years, that's where it goes based on the returns we've seen over the last 3 years. The chances of that happening is probably not very likely, right? And then if it happens to be like a worldwide market decline, the market goes down, your 401k just turned into a 201k. So that $900,000 is now probably $450,000 or somewhere close to it. And now you're really not retiring till the bottom of this market bottoms out, which could take a year, 2 years, 3 years, like we've seen in 2007 and 8, like we saw in 2000 to 2002. And then the crawl out of this hole takes 4 to 5 years. So retirement won't be on your side if you don't start strategizing before you retire.
Yeah, it's kind of like We talk about driving down the road and you see that yellow sign and it's got the squiggly line in it and it says dangerous curves ahead. So what do? Do you stop? No, you don't stop. You pull off the gas a little bit and maybe apply the brake a little bit. And that's kind of what we're talking about here when you get into your late 50s and early 60s. We're not saying get out of the market. We're saying just pull back a little bit. And so that risk level isn't as high as it was earlier in life. Here's our number. Here's our website, 833-368-3680. 833-368-3680. Give us a call. Get a date on the calendar. Let's sit down and talk about what you've done for retirement and how we can help. You can also use our website. Real easy. ZinniaWealth.com, ZINNIA Wealth.com. There's a gold box there. It says complimentary retirement consultation. That's exactly what it is. It's a free meeting to sit down and talk about you, your retirement, and your concerns. Again, ZinniaWealth.com or 833-368-3680.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at ZinniaWealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.